Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, July the 6th, and I want to take a brief update as we wrapped up the first half of the year. I can't believe it. Last Friday, it has absolutely flown by this year, but the S&P 500 ended the first half of the year on a very positive note, up 2.35% on the week. But more encouraging is the mid-cap index is measured by the S&P 400 was up 4.27%, and the small caps is measured by the S&P 600 was up 4.3%. So your small and mids were outperforming large, and that's very good. A lot of catch-up trading there because going into June, a lot of the market was very concentrated. Remember, you've heard if you turn on CNBC, you've seen the Magnificent Seven index. But really the market was being led higher by 10 names. And even as we had this nice recovery in the month of June in the cyclical sector, you still have such a great dispergence this year between growth and value in the equity markets. Just to give you some clarity on this, the S&P 500's growth index, the growth sector in the S&P 500 is up 28.5% year to date. Value's only up 4.5% year to date. So as we head into this week, we had a great month in June, and what was great and encouraging about the month of June, as we were discussing and talking about, was the broadening out of the market. So it wasn't that narrow leadership by the top 10 stocks. You really started to see the value sector participate, and it had a great month. So you fast forward to this week, it's the first week of the new quarter, the third quarter. We're in a quiet period where most companies are reporting within the next 2 to 3 weeks, so they can't release a lot of corporate news. You had a Fed minutes release yesterday. You've had the NASDAQ off to the best start in over 40 years. So it is no surprise as we enter into a light volume, holiday shortened trading week that you're going to see a slight pullback in the equity markets. The other piece of information that we got today was that the ADP jobs report, they added 497 jobs for the month of June, when the expectations were only 220,000. So this resilient job market that we have, what's causing the sell-off today in the equity markets is the fears that the Fed's going to raise and put us into a recession. And so that is what is going on in the equity markets this week, is the fear of the recessionary environment that the Fed is going to put us in is creeped in and caused this pullback. But I would just caution you, we've had a great start to the year in equity markets. Like I said, the best start in over 40 years for the NASDAQ. So it's no surprise to see a slight pullback here, and that's okay. It's very nice, orderly. Volumes are not overly high. It's just a kind of a algorithmic pullback almost, very much a very technical pullback after such a great start. So where does the opportunity lie for the second half of the year in the equity markets? Well, as we've discussed at River Place, we don't see that proverbial recession, that hard landing that is causing the markets to sell off this week happening this year. And we really see a lot of opportunity in the cyclical sector because what is being priced into a lot of your industrial, material, and healthcare names is the fact that we are in fact going to enter a recession. Well, if we're able to avoid that, these stocks have been beaten down and priced that we're going to enter into recession. They're awfully cheap right now and present a lot of great opportunities. So we really see the second half of this year more of a reversion to the mean, where the value sector and the cyclicals come up to meet in the middle with the growth and the high tech names. Now you're still going to have some tech names as leadership and continue to drive the market higher just because of the market cap weight that they hold in the index and the way that trading works. And so if it was an equal weight index, you wouldn't see them having that much control. But Apple's now a $3 trillion company. And they have quite a control on the S&P 500 on moving it up or down one way or the other. But one thing to track is the equal weight, which is the RSP is the symbol, the equal weight 500. And that gives you a good idea of the breadth of the market, how the average stock is doing on a day-to-day basis. And when you see the RSP outperforming the S&P 500, that's a very, very positive sign. And we saw that a lot in the month of June. So as we head into this year, yes, we may get, unfortunately, another 25 basis point increase when the Fed meets. this month, but tomorrow we get the June jobs report, the government payroll report, not the private sector report. And we will get June's inflationary data, or June's inflationary data before the next Fed meeting. And remember, we're going to have last year's numbers fall off. So we could essentially see headline CPI, if nothing changes, under 4% just on how it's calculated. So we continue to see inflation fall. The economy continues to remain incredibly resilient. Had I told you nothing about the Fed and we knew nothing about the Fed's fight against inflation, and I just told you, hey, the U.S. private sector added 497,000 jobs. The estimates were 220,000 for the month of June. That's a great sign for the economy. And what's great about that for the consumer is if you want a job, you can have a job. You get a job, you can continue to pay for things. And you're seeing the labor participation rate start to tick up in the country, which is great. We still have over 9.5 million jobs available that are open currently in the United States. So there's plenty of opportunity there, and that's going to help the consumer to remain strong and resilient through this inflationary time. But remember, inflation's coming down, and it's coming down very quickly, and it's been coming down every month essentially since June of last year, just falling and falling and falling. So as always, if you have questions about how to position your portfolio for the latter half of this year or what we're seeing and have questions about that, call us. We'd love to talk to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much.